Hello traders, this is Blake Morrow and you are listening to the daily Roundup webinar. I hope everybody's having a great trading session. And what day are we in? Happy Wednesday. Happy Wednesday to you guys. This market is in a consolidation phase is what I was meaning to say. And you know, the first thing I'm going to look at is I'm going to look at the S&P. If you follow me via Twitter, which I think some of you guys do, if not most of you, you probably saw this chart. You know, this is the S&P, and we're just bouncing around in this wedge consolidation. So it's very whippy. You can see the market just, you know, kind of popped up there, popped up there for a moment, and you know, it looks like we're passing a coronavirus bill through Senate. You know, so we can spend money on this virus, you know, and look, stocks got a little lift on that just because the algorithms are programmed for those types of things. But the fact of the matter is, even with the IMF, even with, you know, the US doing some, you know, spending some money on the virus doesn't care how much money you're going to spend. So these moves that you see, these little pops, they're just immediately met with selling. And I really think that currently we're just range bound. We're going to be a little range bound, waiting for a bigger move to develop. Now, one of the big events that happened today was obviously the Bank of Canada. If you guys well, you guys probably knew if you were listening earlier, I was long the US dollar Canadian into the news, and you know, I figured they were going to cut 50%. But one of the things that I want to point out is, as they cut, you do realize that the Bank of Canada has got one of the highest rates out there. So if they cut a half a point, they're probably going to cut another half a point moving forward. And I think that's what this market is telling us at this moment, is the Bank of Canada stands ready to combat, you know, this economic slowdown by using monetary policy. And so we saw this big blow up in the dollar Canadian. Hopefully you guys made some money on that. I think now you're going to see dips back to 134 as being bought. So if I take my little you know, arrow here, you're probably probably be able to buy on dips. Remember, it is a long-term bull flag pattern or pennant that points to, you know, 135 eventually. So that's what we're looking at moving forward with the Canadian. The euro dollar found support at the 200-day moving average. I'm such a bozo. I bought it twice at like 111.05 and spun out of it for, you know, 5-6 pips every time, or those both times, knowing that this was such key support that I really wanted to just, you know, get long and stay long as we were above the 200-day moving average, and I didn't. So but you can see where we're very, very well supported in the euro. As I mentioned earlier this morning, a break above 112, or at least a daily close. I think that's probably more significant. A daily close above 112 or a daily close below 111 is going to be really important for the euro dollar moving forward. One of the other pairs I want to bring to your attention really quick is the cable. The cable was developing a wedge, and if you were, I think if you were listening in a little earlier, you probably heard me. I can't remember if it was just chat room that I know it's been the chat room that I've been talking about this, but I can't remember if I mentioned on the Face webinar that you know, the cable looks like we're going to move up towards the 128.50 resistance. Well, we just did. We actually just hit 57, pulling back just a little bit, but the cable is really well bid here, and that's something to keep in mind. We had Andrew Bailey was the new Bank of England head. He was speaking a lot today, and it does look like the Bank of England is going to do some sort of, they're going to cut rates and quite possibly do some sort of quantitative easing. And that's interesting, because what's most interesting about that regarding the cable is that the pound is actually stronger at this moment. And, you know, the markets tend to move on not only on news about interest rates, but expectations of rates. So when you know going in the Bank of England is going to lower rates and possibly do some sort of, creative quantitative easing type of scheme. Um, and that's what he was saying earlier before Deutsche Bank sent out their note, which I tweeted before Deutsche Bank, like, hey, look, this is what we're expecting. Are we expecting some sort of quantitative easing? I asked that question on social media because of after hearing what he had to say. And then Deutsche Bank follows up right after that, saying that they are expecting something from the Bank of England. The fact of the matter is, though, expectations are already for that, and the cable is moving higher. So when expectations are already being met and nothing's even been done, that tells me that the pound may be actually ready to rally a little bit more. You might have, if you follow me via Twitter, I said, when's the EU UK negotiations going to be over? Or when are they going to pause those? I was saying to myself, due to the coronavirus. Look, if trade talks get paused, the pound's going to rally. It's probably going to rally significantly. That doesn't mean that you can't sell that rally, sometime in the future. But I think that any type of pause in trade talks between the EU and the UK might actually see a much stronger move in the cable higher. I'm just speculating here, but that's as far as that happening. But it's something that's been on my mind, something that I'm thinking about. Okay. One last thing, dollar yen. And let's talk about this actually really quick. Dollar yen, do you notice the very shallow bounce that we've had in the dollar yen compared to the S&P? The S&P's had a nice lift since last night. Since this is yesterday afternoon, we've had a nice move higher. Dollar yen, not so much. I think that is a product of the very strong bond market, and yields are weak. We're at historic low levels. It's really hard for me to be a buyer of the dollar yen, which I'm not. I'm actually a seller, but it's really hard for anybody to be a buyer of the dollar yen down here when you have yields that are dropping and bonds that are rallying. So if you look at the 10-year bond market, I know that's intraday, but we're in record territory. Breakout, I think all-time highs, if I'm not mistaken, right? And we're at all-time highs in the bond market in the 10-year. So with yields at all-time or at historic lows and the 10-year at highs, it's a really difficult proposition to be long U.S. dollar Japanese yen, knowing how strong of a correlation the yen has to bond yields. So think about that if you're out there buying the dollar yen, today. I know stocks are a little stronger today. I know they're up. They've had a nice, the Biden bounce. They've had a nice Biden bounce, but the dollar yen isn't really too responsive. It's at the exact same spot it was last night when I was looking at it before I went to bed. So think about that for a moment. Let that sink in. All right, guys and gals, remember, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. Jump in the chat room with me, so at least in between these times that you actually hear my voice, you'll kind of know what I'm thinking, because if you want to see how much chatting we do here, this is how much chatting. I mean, you want to go back since this morning. Since I was here this morning, we would keep going and going and going. Oh, I'm still here. This is how much chatting goes on in this chat room. So if you want to know where I'm at all day, you have to click right here. But in order to do that, you have to be a premium subscriber of ForexAnalytix. So have a great one. Thanks for tuning in. I'll see you tomorrow morning on the FACE webinar. You guys have a great one. Bye-bye.